Hi guys, how are you? Welcome back. Let's do another video. All right, so I'm going to give you all the indices so you can see the big picture, understand the big picture, so you're not making emotional moves based on short-term honey ticking. I'm changing it from honey dicking to honey ticking. All right, so why do I keep saying honey dicking or ticking in this case now? Here's why. First of all, let's go back in time. Let's take a look at the big picture. Big picture is this. First of all, when you look at the dot-com bubble, right, and there's other ones I can show you. I'm just going to show you this one real quick. This is what happened, okay? You have big moves to the downside, right? See it right here and here, right? And then it spends 2/3 of the time going back and forth, honey dicking everybody, ticking, and then you get the collapse, right? That's one. Now, these kinds of collapse, and this is the kind of collapse we're talking about this time around with tariffs and deals, okay? These kind of government intervention deals lead to these kind of um, results. Why? Because the market already had a multiple expansion. It was way too expensive to begin with. Then it was riding on that razor thin, everything is great, full employment, everything is fine, edge. And then what happens is when you tip it over, right, the whole thing starts to collapse. But it's not going to happen in a day. And this is the problem, that everybody's so short-sighted that they don't see the big picture. Now, the next thing I want you to understand is that once this is all said and done, and right now it's not going to make sense to you, but believe me, when it's all said and done, it will make sense. This is all said and done, all right? Look how long it took for QQQ to recover. Now, I'm not saying it's going to take 17 years or whatever it took, right? But it's going to take a long time to recover. So um, keep that in mind. Now, let's take a look at this massive, historic, all-time pump with a multiple expansion. Let me move my pretty little face out of the way. Let's look at this massive, massive pump, right? So this is when you make money, when it's boring, so boring. And your market is down 0.3% today. Boring. Nobody was talking about stocks. Nobody's talking about the Fed. Nobody gives a shit. Boring. Okay. Then you get the pump. This is the pump. This is where all that money, right? Here's stimulus check. Here's another stimulus check. We're deficit spending. We're QEing. We're lowering interest rates. Okay, now we have inflation. Don't worry about it. We're gonna fix inflation. It's all fine. Oh wait, tariffs. Now we have to pay down that Doge. Wait. Okay, this is the end. All right, this is the end. This is a 1, 2, 3 up for the downside. So you saw the big picture. All right. Remember, gonna get these kind of moves to the downside. It's gonna make everybody like, oh my God, shit, the world is down. And I keep telling you, you're gonna get honey dicked, and selling has not even begun yet. Hasn't even started. Chill, relax. But the market is going up. I don't give a fuck if the market is going up. Not the way it works. Okay? Everything has reversed. Now, I'm also going to tell you that every time it gets above the 63-day moving average, you short. What are we doing here? We're struggling with the 63-day moving average. Struggling, absolutely struggling. There's a big difference hitting the 63-day moving average from above and bouncing, going a little bit below and bouncing, versus coming from below, getting above, and trying to buy. No, you don't do that. You're doing it backwards. The problem is that people don't understand. Okay, so we're struggling with the 63-day moving average, which means what? What? That we are distributing stocks. The market is unloading stocks. Okay, and then they stop their selling, then prices rise. But prices are rising. Yes, not because they're selling, right? Because there is an absence of selling. So naturally, prices are going to come. What happens? It's going to honey tick everybody. Everybody piles in, all the noobs, I'm going to make money, I got the bottom. You know why? Because I've been doing that for fucking 17 years, right? I've been doing the same thing for 15, 16 years, whatever it's been. That's all I know. I was 25 when it started. I'm 41 years old, 42 years old now. And, and that's all I know how to do. Buy the dip, buy the dip, buy the dip, buy the dip. Yeah, it's going to work again. Only this time it won't work. That's when you're going to get in trouble, and then you're going to get this move to the downside. Now, how do I know that? Where did I come up with that? Let's take a look. Let's take a look. These are the mags, Magnificent 7. It started out with fucking 2, then it went to 3, then it went to 4, then it went to 7. That should have clued you in. That there's only so many trillion-dollar companies that you can create. Not all that much money in the world. So when you look at the mags, you're going to see this. 1, 2, 3 to the upside. And what does that do? You got a hook here, right? And you connect the dots. This is bare knuckle charting if you guys don't know about it yet. 1, 2, 3 to the upside. It's a fully formed, beautiful structure. It looks great. Okay? Fully formed structure. We can now count on this structure. All right? And what is it showing? It's showing a move to the upside. Right? No matter what sport you ever played, basketball, football, whatever, except baseball, but no matter what you've ever played in your life, what do? You deke, right? You deke. This is a deke. Why? Because this is the compass right here. That's the compass. That's telling you where it's ultimately going to go. This is the wave 1. Wave 1. This is wave 2. Whole thing is a wave 2. It's deking. Doing one of these jobs. Everybody's fucking like, oh my God, it erased this fucking date and did this, and they're all getting fucking excited. And then the shorts are panicking. They're like, what the fuck is going up? I can't. Because they don't understand what they're looking at. That's why they're freaking. Okay, so wave 2 is followed by what? The wave 3. The wave 3 is going to come, but I don't see it. Yes, I know you don't see it because you don't have the experience. And that's why you need to follow and subscribe so I can teach you these things. So now let's take the look at the wave right in here. Little baby. 1, 2, 3, crack. Crack. Okay. But it went up. Don't matter. It cracked. This is a rising wedge. Rising wedge. Fully formed. 4 points. 2 lines. What does it reveal? Right? It reveals a rising wedge. Good. 1, 2, 3 up. It cracks. Now how does it crack? Well, it cracks like this to a bullish formation, but it's a small bullish formation, not a big one. Okay? And what happens? Naturally, price rises to correct from the small um, structure. Okay? So you always start from the highest or lowest point, and that's when you start your count. Right? So 1, this is a 2, right here. This is a 3, right? Get the hook, put the lines in there, okay? And you know wave 3 is going to resolve into some kind of a correction. You got the correction. But the correction is occurring outside of the primary structure, okay? That means it doesn't have a lot of, leg to the upside typically. That means, well, you can have a 1, 2, 3 wave up like that. And what happens in that case is you get an expansion. Then you get the hook. So then you're going to say, okay, 1, 2, 3 up. It's still bearish, the fucking. What do you want me to do? It's still fucking bearish. All right? So, I don't want to give you too much theories, but I want you to understand what structure you're in and what's happening in this whole chart. You got to read it right. You gotta just read the chart the way it is. Whatever reveals itself, that's what it is. I'm not guessing. I'm not sitting here like, well, I think this UK deal. It's not what I do. I just follow whatever the chart says, and if it's bearish, it's bearish. That's it. And it relieves a lot of stress. It doesn't fucking deke me out of fucking position. I can't stress how important this is to extract information from the data instead of applying your vague hunches, feelings to the data. All right, so that's the mags. All right, these are the market leaders, used to be, but whatever. Okay, now let's take a look at the NASDAQ. What do you see in the NASDAQ? Well, you see the same thing. There you go. Let's start from the bottom. 1, 2, 3. Fully formed, corrected through time. Okay, kind of a wedgie. I mean, kind of a hookish formation. And then what happened? Well, you got this right here, right there. See it? There. Look at this little crack here. This should have resulted to the downside. It didn't. So you have a rule. From failed moves, this is a failed move right here. It's a crack. From failed moves come fast moves in the opposite direction. Okay? What it does is it takes out, stops, turns around, goes right back up really quickly, bucks everybody. Okay? Everybody panics out. And then it turns around and goes back down. And you're like, what the fuck? Well, I can't understand this game. Yes, because it's deeking you. All right? Now, you had a head and shoulders in here. Nice and formed. Okay? Popped, pulled back, cracked, looked, everything great. And then guess what? 1, 2, 3, up. Head test. That's what we consider. This is considered a head test. Now, it may not be a head test. Maybe it continues to go much, much higher. But look at the structure, the bigger structure. The bigger structure is telling you what? Right? That you are in a wave 2, a complex wave 2, right? 1, 2, 3, up. Right? It's a complex. But this is a wave 2, and it's bearish. It's a bearish structure. So this is going to ultimately resolve to the downside. If there's anything you should have learned by now, just from this video alone, is that every single wave ends, every single structure fails. Okay? Every single one. Always, no matter what, without a doubt. It's going to happen. The question is when. So this is why it's so important to position your trades correctly, meaning you don't overdo it. You got to be patient. You can't put too much money thinking, this is the top, right here, this is it. Relax, calm down. Anything can happen. Have a position on that's not going to kill you, and then you can add. But I'm losing money. I don't give a fuck if you're losing money. Has the structure changed? No. Okay, then. Keep listening to the message of the market. Chill. You must chill. Relax. If it's telling you everything is fine, then everything is fine. Okay, but I'm losing. I don't give a fuck. But it's going up. I don't give a fuck. Relax. Okay? Listen to the message of the market. It knows a lot more than you do. Believe me. Okay? So make sure your position sizing is correct, and make sure that you have enough room to add to it. Right? Eventually, all waves end, all structures break, and that's the way it is. And that's when you start to make the money. Good. All right. Now, let's take a look at S&P 500. Right? No head and shoulders. Right? Nothing in there. Again, 1, 2, 3, up. Breaks. Right? Starts to correct into a bearish formation. I mean, a bullish formation. Right? 1, 2, 3, up. All structures break. Right? How did it break? 2, 3, right? Okay. So breakout, break, test, go. But within the context of this bearish structure here. Can you go even more? Can you go even higher and kind of push it off, push the line out a little bit? Of course. And this is a very good example right here with the Dow. All right. So you got the 1, 2, 3. Oh, move this. Right. This was the previous 3. Okay. What happened? Well, it broke this uptrend here. It broke, popped. Very normal when it cracks to have one more up or even two ups. You can have two cracks, maybe sometimes even three. Rare, but these are warning signs. This is telling you, hey, I'm getting tired. I can't keep going like this. That's what cracks mean. Okay? So when it does this, all it's doing is expansion. It's an expansion of the structure. Right? This is an expansion of the structure. Now, because it doesn't have a hook, you cannot you cannot really place this upper trend line. There's no hook. So if you put it there, you're kind of creating a false illusion, right? You don't want to do that. Just let it go, wait for the hook, and then adjust the trend line. Then you'll get a better picture. Good. So what is it doing? Coming right into the 63-day moving average. That's what it's doing, right? So there's an expansion of the structure. I've seen this before where it goes into an F flag, kind of does this, right? Kind of breaks down, goes back up, breaks down, breaks back up, and then starts. This is very normal. Okay? And basically what's happening here is the market is trying and trying and trying and trying to get that, pump going, and it just never seems to do it. And then everybody's like, oh, fuck it, I sell. And they sell and everything goes straight down. Okay? Good. Small caps. Okay? Small caps have already broken. It's cracked and it's forming a structure below the structure. Right? So it cracked, tested, dropped, never made a new low, popped, 1, 2, 3 up. This is a structure below a structure, my friend. It's building that pressure below this bigger structure. Just sitting there holding, and then eventually this is going to give out and okay. So nothing in all the indices that we looked at so far has any kind of signs of bullishness in the bigger picture. Nothing. But it's going up. Don't care. You don't just if the guy goes like this and then he's going to go to the right. Why would you go like this too? You wouldn't. You just sit there and look at him because he's done it a million times before. Don't fall for the deep. Good. Now let me show you something. There was a chart I showed before, the number of stocks above the 20-day moving average, and it was overbought. Right? Let me look. Here it is. So basically what this is the number of stocks above the 20-day moving average. And the first chart, I don't know where the first chart is, but the first chart that I showed was that it never really went oversold, despite the fucking market crashing on a monthly now. Okay, there's a monthly. On a monthly, it never went to oversold. So I'm like, fuck, we haven't begun to sell yet, which is true, right? The data is telling you that. And then we started to go back up, honey ticking, right? And then what ends up happening is we go right into overbought territory immediately. But we're not even fucking near all-time highs, and everything looks like fucking shit. And we're already overbought. That's not a good sign. Okay. When you compare this information with the data I just showed you, what do you get? A bearish. It's all bearish. There's nothing bullish in it. It's overbought. It's fucking bearish structures, wedges, bear flags all over the place. Good. So here's another thing I want. When hold on. All right. So let me bring this down to a deal. So on a daily, when you look at this chart on a rate of change, okay, 63 days, that's a quarter, right? You look at it from a rate of change, you are still in distribution. Okay, all it's doing right now is correcting from the previous drawdown, and it's still kind of oversold, not like it was before. Okay, That's all it's doing. There's nothing bullish on this chart. Nothing. Zero. So again, 6 3-day moving average, which is a quarterly average. Despite this move to the upside, everybody's like, oh my God, it's going up. It's V-bottom. Time to buy the dip. Let me chase. Like, no, it's just correcting. All it's doing is just correcting. Eventually, you're going to get the selling again. Okay? Now, let me go back in time, and I'm going to show you, okay, in 22, 23, look where the rate of change was. See it? All below the zero line. Okay? Got a little bit of a bounce here, but it was all below. All of it. When we come out of this, you can see it now. Okay? That's this. Distribution. And then eventually they started to buy it. Okay, fair enough. Again, when you're shorting, it's extremely difficult because you got to think completely opposite. And most people are not geared for that. They're not prepared, one, to lose, two, that there will be bear market rallies, and these bear market rallies will rip your face off. The most important aspect of a bear market rally is what? That it convinces everybody that that's it, it's done, it's over, it's going to the fucking moon, you're wrong, time to sell, you got to buy. That's what they do. They have to. What happens in reverse? The opposite. When it starts to crack, there will never be another bullish day ever again in the market. Forget it. There will never be green. If you're buying stocks, you're an idiot. You got to short. So what happens? Everybody's doing the complete wrong thing. Right? They're shorting in the hole and buying at the tops, and shorting in the hole and buying at the tops. They're falling for deeks left, right. They're doing it all completely wrong. They blow themselves out. But what do they conclude? Market is rigged. This is bullshit because God forbid that you don't know what the fuck you're doing. Right? That's not possible. It's that the markets are rigged and you'll never buy stocks and then it sucks and da-da-da-da. Okay? So don't be that guy. I was that guy. I know it because I got my ass kicked, but eventually I learned. You can only fuck me so many times, right? But I'm the kind of guy that, I don't make the same mistake twice. I make it 3 or 4 times just to be sure. That's the kind I'm a little bit of a meathead. So, anyway, try not to be that guy, right? Learn. This, honestly, either you're going to listen to me or life will teach it to you. Either way, or you'll just stop trading and go do something else. Either way, you're going to learn. There's no way around it. I promise you. All right. So that's enough for this video. I wanted to get this out to you guys. Thank you for your support. Thanks for following. Click like, follow, subscribe. And I'm going to navigate you guys through this madness. And I know in your little hearts, you're like, oh my God, it's so bullish, everything. We have a deal with UK for 10%. It's a deal. How the fuck is it a deal? A deal is something that you get that is below something that you had before. So if a car costs $100,000 and you got it for $95,000, that's a deal. When you got a $100,000 car and now you're going to end up paying fucking $105,000, $110,000, that's not a deal. Right? But that's what's happening. We're going to impose 10% tariffs on all UK goods and services. Deal, right? So that means we're going to pay more. How is that a deal? I don't know. But people fall for it. They're like, yeah, this is great, man. We got a deal. Yeah. Fucking retards. Anyway, that's it. Love you guys. Talk to you.